your take on the commodity crash down that was seen yesterday? You think it's a knee-jerk reaction? We've seen such moves earlier, and things will rebound soon?
Yes, hi. Yeah, obviously the market is quite freaked out by what's going on in Turkey with with the lira. That's having a contagion or contagious effect on some of the some of the other countries and some of the other markets, and it's really just compounding some of the trade war fears that we've seen between the US and China, and I think people sort of wonder where it's going to end. I mean, the weak lira and also the weak Chinese currency have been supporting the US dollar, which has been putting some pressure on gold. But if you look at sort of oil coming off a little bit, I mean, Turkey's not a huge buyer of crude oil, shouldn't have that much of an impact. It just sort of shows you that how much the market is sentiment driven. But yeah, I think a lot of it certainly should rebound at some point.
Also just particularly wanted to say that in the end, right now you're seeing a sort of risk-off as far as the commodity pack is concerned. In the end, it will be dependent on demand and supply, which product, how much is being able to produce?
Yeah, I mean, I look most sort of closely at steel, and obviously steel's one of the targets with aluminium of the U.S. Import tariffs. I mean, it's interesting. The Chinese currency is weakening, and that should cause fear that would enable China to lift its steel exports and put pressure on other markets. But the Chinese economy is slowing a little bit, and Beijing is putting some stimulus, particularly into infrastructure. So I think China's more sort of concerned about its own market than what's going on in some of the export markets. What we are seeing though is Turkish steel now coming into Asia. They can sell they've got a weak currency. It gives them benefits for exports. Now that's putting pressure on some of the other sort of traditional Asian producers. So that's the fear. It's really that kind of knock-on effect. People looking for new markets, but also that, as I mentioned, contagion. People are sort of nervous, and it's really the uncertainty. How long is this sort of trade conflict going to go on for? Is it going to deepen? Is it going to affect other products? Is it going to affect the currencies of other countries? So at the moment, it's all moving very, very quickly, but sentiment is a bit bearish in some aspects.
Hi, Paul. This is Nantara that's joining in from the New Delhi studio. I have a different question for you. One of the big reasons you're seeing the commodities in a free fall is thanks to a news report that came out that Beijing is willing to talk to the United States about trade talks, that some high-level delegation is in fact going to leave for Washington in late August, and that apparently is also spooking markets. Now, I want to understand why that should spook markets. Shouldn't that come in actually as good news for the markets?
But potentially, I mean, because what we're seeing a lot of commodities now, particularly in China, is futures are such a major influence these days. So you have a lot of, I guess, what you might call retail investors, people that are sort of putting money into commodities and futures, whether it's steel or iron ore or other areas, and they tend to be sort of very, very active now of some of the sort of government announcements, and that can quite often sort of cause a bit of a kind of price spike or price volatility one way or the other. But yeah, it is interesting to what sort of causes jitters at the same time. When Beijing announces that it's going to sort of pump in a lot of money into the railways over the rest of this year and infrastructure, which has been slowing in China. We saw a sort of positive reaction, but also the background in China is a lot of the supply side reform is ongoing. They're still trying to take out a lot of capacity. They're focusing very strongly on improving the environment, and they're telling the country's steel makers and construction companies and other industrial entities that they've got to cut capacity and to try and meet these pollution targets. So there's a number of sort of moving parts I think that can have an impact on sentiment.
If I could, my final question to you, and we need to keep this one very short. We've seen gold right now bounce off from a 19-month low. Clearly, investors are staying away from the metal pack. They're staying away from safe havens like gold. Why is that, and where is all of this money going? Is it actually still going to the U.S. Treasury bonds and the dollar? Is that the new safe haven for the new world order?
It's difficult to say. I mean, there's probably a bit of that going on, but obviously gold is always, there's always a kind of macro. It's more of a tied to macro factors than supply and demand. So I think yes, I mean you got people. Sort of, I think, sort of going back to U.S. dollars looking sort of quite good again. But I mean, what's going to happen with interest rate cuts from the Fed? People are not quite sure what's happening there. So yeah, there's lots of different behaviour going on. But as I said, it's a very it's a quickly changing story, and it could change again fairly quickly.